What's going on, ladies and gentlemen? Welcome back to another video here on my channel. Thank you once again for tuning in. Today is going to be special. We're going to talk about something that I believe everybody needs to hear at this current moment in time in the market. If you're somebody who regularly follows me or you're joined into Boiler Room Trading's private stock trading group, then of course you guys already know where I might be going with this. Today we are going to talk about the stock market and some stocks and how I will prove to you that we are in fact in a bubble. A stock market bubble. Many stocks are in a bubble. If you're not familiar with what a bubble is, basically means that the stocks are extremely overvalued and definitely going to be coming down or due for a massive correction and or a crash. So there's a lot of talks going on right now on mainstream media, along with Facebook groups, different stock trading groups, etc., about whether or not we are in a bubble. So you will come across many people that will say we're not in a bubble, many that will say we are in a bubble, and then you'll come across tons of people that say you have absolutely no clue what you're talking about. Look at the market, it's on fire right now. So today we're going to show you many examples and reasons why we are in a bubble, and that is what should scare you and make you tread very cautiously within these markets right now. It's not that the markets can't continue up or they can't provide some more extra gains in the following year, maybe even 2 years. It's the fact that the gains don't outweigh the risks anymore. You know that old saying, buy low, sell high? Well, if you look at everything right now, it's high. So why would you buy? Exactly. So let's jump into it, ladies and gentlemen. So we're going to move over to the first slide. The question is, are we in a bubble? So if we are, the bubble isn't going to pop, right? And it's not going to look like this beautiful little bubble here, okay? If it does in fact pop, it's going to look really ugly. It's going to be looking like everyone's losing some money. People are running around looking like chickens with their heads cut off, all right? So if in fact the bubble does pop, this is what you're going to look like. Oh my gosh, wow, right? And those are going to be the investors that didn't educate themselves or just really didn't take the time to figure out if we are or aren't in a bubble. And the fact is, we are in a massive bubble. So you don't want to be looking like one of these two ladies that go, oh my gosh, wow. You want to be prepared and understand that we are in fact in a bubble so that when it does happen, you don't get caught off guard and it's well anticipated. All right. So moving forward, we're going to look at a few examples of stock charts that are in fact bubbles. All right. So there's one important thing you need to understand. The easiest way and the most simple way to identify if in fact you are in, or if there is or it is a bubble, is to look at a stock chart and then you ask yourself, does it look like a hockey stick? Do you know what a hockey stick looks like? Most of you watching this video probably do. When stocks, markets are in a bubble, they look like a hockey stick, right? You have your stick and it goes straight up. Sideways curls, straight up. When they look like that or very similar to, chances are you're in a bubble, okay? It's pretty simple. So let's take a look at a few of these pictures, right? So this one I'm pulling up here on the screen, I'll enlarge this a little bit. This is the NASDAQ composite, back around, 1990s. This is what a bubble looks like, right? You can see it curls up and goes through a massive spike. That's a bubble. All right, let's take a look at another one here. Let's get this one off the screen. We'll remove that one. Let's take a look at this one. So this is the Bitcoin tech bubble. The Bitcoin bubble, excuse me. Everybody knows Bitcoin's a bubble. Some didn't. Everybody now goes, yeah, we can see there was a bubble. But it's the fact that nobody wants to admit it when it is. When things are a bubble, everybody has a hard time admitting it until it crashes. And they go, yeah, that thing was way overvalued and we know. It's like, no, you didn't. You tried to just absolutely disregard any of the valuable or completely valid information that people were telling you when it was a bubble, and now it's crashing. You're going, yeah, we knew it was a bubble. No, you didn't. Why don't you just listen to what people have to tell you? The typical people you want to listen to in times like these are contrarians. The people you want to listen to are usually the ones that are telling you what you don't want to hear. People like Jim Rogers, Peter Schiff, Dalio. These are the kind of people that you want to tune into. You're not really going to want to go to CNBC and listen to what they have to say. Why? Because that's mainstream media. Mainstream media is completely not in your favor, okay? They aren't going to tell you what you really need to hear. They're just going to give you the news, which is obvious, okay? They don't tell you really much that's beneficial. It's usually fake. It's been scripted. It's been reiterated, okay? It's not good news. usually. So I won't say that entirely, but for the most part, anything that they have to tell you is pretty obvious and or isn't going to do you much good until it's too late. Okay, perfect example of this is, if you guys know of, recently, and we'll talk about this in a little bit, the stock TLRY, a pot stock. I was saying for days and even weeks that it was a bubble and you're all in a bubble, and people told me I was incorrect and I'm an idiot. And if you check out that stock now, it has crashed. The day before it crashed, what were people on CNBC doing? Oh, look at the stock TLRY. It's a massive pot stock. It's crazy. It's on fire. Everyone's buying it right now. They did mention that it could be a little overvalued, but what did they not do? They didn't tell you that it was a massive bubble and it was probably not a good idea to buy because it is very, very sketchy. The company had only been on the market for 2 months. The company was negative 58 million in earnings. Their market cap was 14 billion. They aren't actually telling you what you need to hear. And that's the good stuff. The fact that TLRY was a bubble. It was a horrible time to buy. Oh, but what were people like me and contrarians doing? We're saying this is a horrible idea. You shouldn't be buying this. You should say very far and clear. What happens 2-3 days later? The stock crashes, loses over 70% of its gains. Crazy, right? Figures. Mainstream media doesn't tell you the truth all the time. Figures. All right, so back again. Here's an example of a Bitcoin. Right? Remember Bitcoin? Everybody said it wasn't a bubble. We're all like, it is a bubble. Well, there you go. What does it look like? Looks like a hockey stick. All right, let's take a look at another one here. Here's just another chart of a bubble. I don't know which exactly one this is. I can't really read them. I just grabbed some pictures off Google. That's how easy it is. Go Google what a bubble is and you'll know. So here's another picture of a bubble. What does it look like? Kind of looks like a hockey stick where it just goes straight up. Okay. Well, let's take another look here at a bubble. Oh, here's another peaks and valleys, blah, blah, blah. Some stock chart, NASDAQ, S&P 500 bubble where it goes straight up and then boom, crashes. So now that you guys got a pretty good idea as far as what a bubble looks like, how about we take a look at real time events, real stocks right now, real market conditions, so that you can actually compare what you've just learned at looking at these pictures into what is currently taking place. And so if you don't believe we're in a bubble, you might change your mind here in about a few seconds. All right, now we are currently looking at real-time stock charts, okay? The company we're looking at right now is Boeing. Now, the pictures I showed you may not apply to every single stock that is on the market right now, and it shouldn't, okay? But what we're going to look at are some major indicators and major stocks that clearly scream bubble. Okay. Now, does it mean they're going to crash tomorrow? No, it doesn't. Does it mean they're going to crash in a year's time? No, it doesn't. It could be 2 years. Hell, it could even be 3 years. But all we're saying is what we do know is that we're in a bubble. Now, what other people will tell you, is even if it is a bubble, you're going to miss out on massive gains. It's not that we're going to miss out on massive gains. We're still going to make money as these things are going up. But we just know the downside risks more than you do. So we trade them a little bit more cautiously. We might hedge positions. We might play things a little bit safer, okay? Right now, investing in the stock market is like playing a game where you and your friends get in a circle and you fill up a water balloon and put razor blades in it. I know that doesn't seem very realistic, but let's say you could fill a water balloon with sharp razor blades without the balloon popping when they go in, right? And you and your buddies and your friends, you sit around in a circle and you basically play hot potato with the water balloon that has a bunch of razor blades in it. Doesn't seem like a very safe game to me. It seems like a pretty dumb idea. And that's kind of the same way investing into the stock market is right now. There's a lot of risks involved with playing that game, just like passing a water balloon around with razor blades in it. If I were my friends and they, got me into playing, if they somehow got me into jumping or throwing a water balloon around in a circle with razor blades in it, I would say, you know what? Sure, I'll join you guys, but let me first put some gloves on so that if it does pop on me, I don't get cut or I don't get cut too bad. I'll let you guys get sliced up. How about that? And then I'll play it smart. That's the way you need to be thinking right now, okay? Don't be thinking like the majority. Prepare yourself. Be educated, all right? So what are we looking at right now? This is a stock chart of Boeing. And let me minimize a few of these things on my chart here. All right, some things that we don't really need right now, okay? This is a current, let me draw this down a little bit. This is the current stock chart of Boeing, okay? What we're looking at right now are 20-year charts on a weekly time frame, okay? So we're looking at past 20 years, weekly time frame. Now, some of you may go, well, yeah, if you're looking back that far, well, it's like, dude, it's been almost 11 years since the last market correction, so you at least have to go back 10 years, 11 years to get valid proof. So if you look at Boeing right now, what does Boeing look like? kind of looks like some of those pictures I showed you of bubbles. All right. So I guess we could all agree. And then you could also state, and let me give me just 1 second here. I need to do something here to pull up some drawing tools. So hold on just 1 second. And boom, boom, and boom, boom. All right, here we are. All right, so when I said things look like a hockey stick, look, you could say there's a hockey stick right there. Hockey stick pattern. That is a bubble. Okay, let's go to another one. Some common ones you guys might know of. So let's take a look at, let's say, Amazon. Oh, whoa. If I ain't never seen a bubble, I can guarantee that's a bubble. I don't know what's a bubble if Amazon's not a bubble. Now, we all know Amazon's a strong company, and they're basically, you know, on the path of taking over the world. They might as well make that their slogan. Amazon, trying to take over the world. Or Amazon, we're destined to take over the world. Because that's basically what they're trying to do. And we all know it. And whatever, kudos to them for running a massive and awesome company. But the fact of the matter is, Amazon, bubble, crashing, gonna happen. All right, let's, oh, wait, hold on. We got to draw that hockey stick, right? Here you go. Boom, hockey stick. Or maybe, you know, kind of like a cane or something, you know. Again, it doesn't always have to be picture perfect, you know. It doesn't have to be a picture perfect, you know, hockey stick. But anything that looks very similar to a hockey stick, bubble. All right, let's move forward here if you guys aren't convinced yet. What's another good one we should look at? Oh, maybe Apple. First $1 trillion company, bubble. All right, and then we'll also talk about a few other things in this video. So again, right here, you could say, well, there's no clear hockey stick, because there was kind of a hockey stick, right? And then what happened? Boom, right? Here's another kind of hockey stick. What happened? Boom. Here's another massive hockey stick. What do you think's to follow next? Boom. Okay. I mean, let's continue, right? What's another good one? Netflix. Netflix is another good one. If I ain't seen another bubble, I don't know what is. Check it out. Massive bubble, hockey stick, boom. Boom. That blue line, target price, $220. So again, as you can clearly see, I just showed you like a couple. Oh, you know what? Another good one I just thought of. Let me take a look at NVIDIA. Bubble, ladies and gentlemen. Absolutely massive bubbles here. If you don't believe it, you're going to get crushed. If you do believe it, you'll plan accordingly. It's clear as day. It is so clear as day that it's a bubble. Now, again, like I said, a lot of people get caught up in the everyday mainstream media news. You want to know what the media is probably saying right now on CNBC or I don't know, maybe some like Fox News or any other news station that you know, outside of CNBC or something, that might say, oh yeah, market's pretty high, but GDP's good and employment's good and we're growing and Trump's doing some amazing things. All the signs are pointing good. That's fine. What should they be telling you? They should be telling you that, yeah, though GDP is good, though unemployment might be good, though a few of these indicators might be good, the sad to say is we are in a massive bubble. The stock market is super high. It is a super high risk investing. It's super high risk to be investing right now. The risks are, the risks are greater than the reward. Even if the market does a natural pullback, it's going to be crashing 50%. Most stocks are going to lose 50% of their value, if not more. Those are the things they're not telling you. If I were watching CNBC and they told me, whoa, massive bubble, I'd slow down in investing, I'd probably take their word for it. But they can't do that. Well, actually they can, but the reasons they don't is they don't want to scare the public. They think scaring the public is worse than letting the public lose all their money. Or, not to say lose all their money, but get hit big time, right? They think that scaring them is worse than actually hurting them. So that is why you listen to the Contrarians, okay? If you've ever watched Peter Schiff or someone like that on CNBC, he'll tell you his opinion. And then he'll tell you one thing, that the main reason we're in a bubble is because of the federal government and how they affect the system and because they don't do things the way they should. And the first thing that mainstream media outlet will do is they will shush him. As soon as he gets involved with saying that it's the government's fault, they go, nope, shush, won't let you talk. Interesting, right? Now, I'm not here to be your doomsday guy, but I'm here just to spit the facts. And it's pretty clear as day that the stock market's in a bubble. Here's a perfect example. Look at Nvidia right now. Holy smokes. That's a good run, ladies and gentlemen, but that's soon to go like that. Okay? So I hope just by these few examples, you can clearly see we're in a bubble. Sure, GDP might be good. Sure, there might be some economic growth. Sure, the tariff things could be a good long-term, in regards to long-term growth for the United States. Sure, unemployment might be high. Sure, people are spending. You know, with all these things, sure, the market might go up another year. Sure, it might go up 2 years. But if you're denying that you're in a bubble, it would just be naive. And if you think that the risks are less than the reward right now, you are mistaken. Risks are extremely high right now. Very high. All right. So what I'm going to show you might not apply, or not necessarily apply, but what I'm going to show you might not necessarily, or you might not necessarily know exactly what I'm talking about. And it doesn't mean that what I'm about to do will happen to every stock. But what I am going to do is a very accurate, or I'm going to use a very accurate tool to project that if any of these stocks were to crash with the market, or the market goes through a really nasty crash, which is what we are expecting, this is the kind of pullback or value loss that you will see on these stocks. So let me grab my tool here, and I'm going to do these very quick. And now I can guarantee you once this video is done, I'm going to get comments on it. You're an idiot. You have no clue what you're talking about. And that's fine because I am well prepared. I am very equipped for what's to come. I'm not worried. You're probably the one that would need to worry in that situation. But I'm here to try and help you as much as I can. And this is the best way that I can do it, by publicly making YouTube videos that don't sugarcoat anything like the mainstream media. That is why you come to the boiler room. That is why you come to boiler room trading, to get away from the mainstream media noise. So let's take a look at a simple Fibonacci here, and let's do this. So if we were to do a Fibonacci on, let's see, NVIDIA, if my tool will work properly, you could expect, oh, I hate when it does that. It always disappears on me on accident. Okay, so you could expect that if NVIDIA went through a respectable pullback, you could expect the price of NVIDIA will drop all the way down to about $148. If it breaks our 50% retracement, it will then probably test the 61.8% retracement at $120. Now, not all of them will fall. Some will hold stronger than others, but these are the respectable pullbacks you can anticipate if we go through a nasty market correction or nasty market crash. You could expect NVIDIA from 285 down to 160 to 120. So basically anywhere from below 180 to 120 is where you could expect NVIDIA. All right, moving forward, let's take a look at Boeing. Where can we expect Boeing? So let's see, this is that 2007? So from 2007, 08 era, you're going to be going all the way up to there. You could expect a pullback on Boeing, though I will say this, that since Trump's been in office, there has been more government spending in military products, so that might kind of alleviate some of the drop that could happen on Boeing, since there's been more spending into that area. Since Trump's been in office, he's increased the military spending, so that one could result in less of a drop, but let's say it didn't. You could expect that you're going from 374 down to about 200 or $160 a share. Okay. Let's go forward. What about Netflix? Netflix will get smoked. All right, so let's see. From there down to here, you could expect Netflix dropping. Well, it's already dropped from there. So let's just say if it went from 423. So from 423, you could expect it down to 220 or even as low as 160. All right, moving forward, what other big one do we have? We have Apple to go over. So let's take a look at Apple, AAPL. So Apple, 2004, 2008. So we got to go from about here. Last time we had a recession up to here. That's the bull run. You could expect that Apple will see pullbacks from its current levels down to, so from 220s down to 120, and maybe even as low as 95 or 100. You could expect somewhere in that area. Again, Apple just kind of became the first trillion-dollar company. Basically, every single one of their products is in someone's home or in their pockets. So again, since Apple is kind of like the major tech company that everybody owns, their process of crashing could be slowed dramatically in comparison to some others. I could see that as a possibility. All right, let's move forward. What was the other one? We did Boeing, Nvidia, Apple, Netflix. Let's look at Amazon. Amazon will get smoked. Okay. So from 2008, which is right there, yeah, Amazon will probably be the one that gets just smoked the worst. All right, Amazon. If Amazon does a respectable pullback and the market crashes as bad as many think it will, you could expect Amazon from 2000 all the way down to $1,000 to $800 in a really nasty market condition. Now, I know some of you are thinking, there's no way it could drop that much. There's no way. Well, let me show you. Yes way. Okay, let me show you yes way. All right. Granted, what I'm going to show you isn't as reputable and reliable as some of the companies I showed you, but again, all bubbles do the same thing. Now we're going to look at the pot stock TLRY, the one I told everyone was going to crash, and many other people did. I'm not a super genius for saying it. It's obvious. It was obvious it was in a bubble. And everybody who didn't believe it was in a bubble said it was obvious after it crashed, right? Funny. So, again, we're going to look at TLRY here. This was a recent pot stock that just basically went crazy, overhyped. It hit every news board, every news channel, every stock room, every chat room, and so everyone bought it up. So here we go. Here's TLRY. But I have to change the date, the time frame on this. Ready? So we're going to go to a 180-day 4-hour chart. So again, let me delete this first, and let me delete my old drawings on here. Okay. So here we are. Hockey stick pattern, bubble. Tilray, the pot stock that went from $20 to $300 in the course of like 2 months. We said it was a bubble. What happened? It crashed from $300 all the way down to, what is that? $100. So from $300 to $100, it went from $20 to $300 in 2 months. It took 2 months to go from $20 to $300. That's a massive move. But it only took how many days? It only took, so from $20 to $300 in 2 months almost. But from 300 all the way back down to 100 in 1, 2, 3, 4, 5 days. 2 months to make gains, in 5 days to take them almost all away. Good job, Tilray. Good job. Okay, that is the risks involved with bubbles. Okay. Secondly, I will state this. To show that the Fibonacci retracement tool is very accurate, I'm going to show you that once Tilray first popped, what did it do? It first crashed all the way down to the 50% retracement. And the 50% retracement was those little lines that I was showing you on the chart in comparison to all the other stocks. Normally on natural bubbles and pullbacks, that's where it eventually crashes to. So if we do like a 180-day chart here again, that might be a little bit iffy, but I think you guys will get the point. All right, so if we go from, what is this? We had to go from like the low of 20. So we go from 20 up to 300. And then it crashed. Ready? I'm going to draw this line. Ready? Watch this. So this right here is the 50% retracement level. Watch me draw straight across. There. This is the wick. This red wick right there. It came down to basically test the 50% retracement. It dropped a tad below, but it came right down there. And then you can see the price bounced all the way back up to right there. And then it came all the way back down. Tested the 50%, broke through, failed, tested the 61.8%, failed. This thing's going to continue down, okay? So this is an example of an overhyped bubble, okay? So when you go back and you look at like, Amazon, right? So let's do this again. Let's zoom out here, clear these drawings. Let's zoom out, right? And let's do something. We'll do this for fun, ready? We're going to do this for fun. Ready? We'll zoom out, we'll take off this drawing, and then what we're going to do here is I'm going to draw over, one second, I'm going to take this, and I'm going to take my drawing tools, and this is to kind of give you a perspective. We're going to go like this. Maybe I'll make that a little bit bigger, speed this process up. Okay, we're going to draw over all this stuff. We're going to draw over that. We're going to go over that. So we're going to act as if this crash hadn't happened yet. And then I'm also going to take a green tool here. We're going to kind of cover up this red mark because that's kind of just non-existent, right? So we're just going to keep going up and act as if this hadn't crashed yet. Straight up, like that. So that's the current chart right now. The bubble hasn't crashed yet. So take a look at that. Right? Now let's look at, change the time frame to the, let's see, we go back to, dang it, Connor, you suck. Go to this, and we're going to go to our weekly chart, and now let's take a look back at Amazon. Tell me if they don't look very similar. Oh, why'd you do that? Why didn't you go? That's weird. Okay, hold on. They almost look similar. Oh, yeah, nope, got to change it over still. Again, 20 years, week. There it is. Whoa. Whoa, they look so similar. It's because we're in a bubble. So, and then we could look at the stock market lastly, SPY. Now, the stock market doesn't necessarily look like that. That's because the stock market usually tends to trade a little bit differently. But let's put it into perspective like this. Okay. How about when we had the dot-com bubble? This area right here, that was the dot-com bubble when the dot-com bubble broke, right? And then this was the bull run after the dot-com bubble. And then this was the 2008 crash, which they called the Great Recession, because it wasn't a full-on depression, but it was so much bigger than a recession, they had to give it something more. They call it the Great Recession. So again, look at this. This yellow circle I'm drawing now, that's the dot-com bubble, okay? Then this yellow circle was the bull run from the dot-com bubble up to the housing market crash in 2008, 2007. This was the Great Recession, where they call us a just absolute horrible stock market crash in 2008. Okay, now this is our bull run from 2008 to 2018. We are currently probably triple the bull run, or yeah, we're probably triple the bull run from the dot-com bubble to 2008. So we're probably triple that. So this bull run's massive, which just means that it doesn't have to crash. It just means that when it does, the crash will be twice or 3 times as worse. Okay, so let me put this into perspective for you. If the market does a respectable pullback, as we've talked about, from 2008 lows all the way to the current highs, you can expect that the SPY right now is priced at about $2,930. You can expect that it will pull back all the way down to either $1,800 or even further, all the way down to $1,500. Maybe even more, depending on how bad it is. You never know for sure, but that would be a respectable, natural, technical analysis pullback in the stock market. If that were to happen, what do you think is going to happen to the other stocks? Okay. So, ladies and gentlemen, enough of me spieling on. I hope that helps you guys. I hope that kind of puts things into perspective for you. Again, we never know exactly when the bubble's going to pop. Everyone's like, well, when do you know it's going to pop? When you don't know when it's going to pop, right? You know, if I handed you a balloon, right? If I gave you a balloon right now, a little rubber balloon, and I told you to blow into it, but when you're doing it, tell me how many times you can blow into it before it pops. Can you do it for me? So if you can't do it for me, then you shouldn't tell any of us that we're idiots because we don't know when it's going to pop, or that you don't know what you're talking about because you can't tell me when it's going to pop. You're right. I have no clue how many times it takes someone to blow into a balloon, a rubber balloon, before it pops. If I did, I would be a trillionaire because I'd be able to time the market 100% perfect. But nobody knows for sure. So if you can blow into a rubber balloon and it takes 100 times to blow into it, then it pops, then you should be the one telling us when the market's going to pop. But what I can tell you, okay, when you blow a little air bubble with a little soap, right? What I can tell you this, the faster you blow air into that bubble, usually the faster it pops. But if you take your time and you blow into the little bubble when you dip it in the thing, and you blow into that bubble slowly, you usually get a bigger bubble and it forms much better and it takes a longer time to pop. Okay? So know that the faster things go up, the longer the quicker they pop. The longer it takes for them to go up, the longer it takes for them to pop. We've been running on a bull run for a long time. So yeah, it makes sense that it's taking a little bit longer for this thing to pop than the previous ones. But I stated before, quicker you blow into a bubble, the faster it pops. The longer you blow into one, the longer it takes for it to pop, or the better chance that it has of growing even bigger. So I do believe markets here are going to go on one last push phase to the upside, and then they won't be able to sustain, and pop goes the bubble. So, ladies and gentlemen, I hope that helps you guys kind of put some perspective and understanding, where my head's at, what I've been doing, thinking about these things. So if you guys like the video, please do give me a thumbs up. Do like, share, and subscribe to anybody you think would see this video as value. And if at any point you guys would like to join into our live stock trading team or trading room or course, it's the first link in the description below. You can join our private team. If you're someone who would like to just join a free community, we do provide that as well. It's also in the links of these videos below. Everything you need to know about me, our trading team, and our trading environment is all linked in the description below, so do check that out in each and one of the videos before you head out. As always, ladies and gentlemen, thank you very much for tuning into the Boiler Room, the place where you can go to get away from the mainstream media news.